Hello everyone, welcome back to my channel. So this video marks the end of the week number 14 in this Road to 200k challenge. This week we had a different experience. This was a quite eventful week and not in a good way because just like it happened last week with American Airlines and for posting their earnings. This time it was the time of Estée Lauder posting its earnings last Thursday, and this was a situation which apparently I did a mistake because, as you saw at the start of the week, I sold some puts on Estée Lauder with a strike price of $82. But I did it because I was under the impression that Estée Lauder's earnings would only take place at November the 6th. However, that is the date at which Lyft will post its earnings, will release its earnings. So I made a mistake and I ended up confounding the dates, and in fact Estée Lauder was expected to release its earnings on October 31st and not on October the 6th. So I made this mistake and I ended up selling some puts for put contracts with a strike price of 82. And of course, this ended up not being a good decision, especially in the aftermath of what just happened, because as you can see right here, currently Estée Lauder is trading at the price, or closed on Friday at the price of $66.84. Now, this of course is a very, very big difference to the price that was before the earnings were released, and the reason was that these earnings were quite the earnings release was quite eventful in a way that the estimation for the earnings was 9 cents per share, were earnings of 9 cents per share. Now, the point is that, and I can show you here the financials of the company, which are already here on Interactive Brokers. So that what happened was that in here, the stock or the company, this they had an unusual expense here of 256 million. This was apparently because of a settlement, legal settlement that they had to pay, and so they ended up having a loss at the quarter. And so this apparently was not something that would be expected. But if we not consider this one-time expense, this one-time settlement, the earnings per share of Estée Lauder would have been 14 cents per dollar. And so I can also show you here that Estée Lauder earnings, in fact, as you can see right here, the earnings ended up being far above the earnings expectations, were beaten by 46.83%, so almost 50%, as you can see, because it was expected actually 10 cents per share and it was reported 14 cents per share. So this was quite good. However, this is from an adjusted perspective, because in fact they ended up having a loss because of this one-time settlement. However, and the biggest cause of the stock having dropped 20%, and yes, I'm spelling it correctly, 20%, more than 20% on Thursday, was that because of the uncertainty that goes on with the company in China, because China is a very, very significant market for Estée Lauder, because of the uncertainties that are ongoing with China. And now, because a new CEO will come in on January the 1st, the company decided to withdraw its earnings guidance for 2025. So what this means is that they don't have, basically what this means is that they don't have much of a clue of how much will be the expected earnings for the coming year. And so because of this, investors were quite scared, I would say, because even though earnings were were quite above they would expect it on an adjusted basis, and even though the revenue was a little bit below, as you can see right here, it was a little bit below what was expected. The main focal point is that investors became a little bit clueless of what's going to happen with the company for the next year. And so expected earnings are, of course, much more important to gauge the value of a stock rather than the past earnings. And so because of this, the stock ended up dropping by more than 20% just on a single day. And I can show you here. So basically the stock had a very, very big gap in here, because as you can see here, this was on Wednesday, all right, before the earnings. The stock closed on 87.15, and then it opened on the next day at 66. So it was more than 20% of a drop, or in absolute terms, more than $20 per share drop. And so the stock has not yet recovered since then. And so currently it is trading at let me see, it closed at 66.84. So now apparently this was something that was completely unexpected, and now the mistake was that even though I would have to withstand this blow, of course, because I already had stock on the company, but of course, because I had sold the puts, I was forced to buy at $82, something that was already at trading in the 60, 66, 67, 68. So this ended up being a mistake that proved to be costly. However, some loss would have been withstood anyway. Now, given this current situation, and because of course, in my view, the company still has a lot of potential. And why is that? Because the company, and to give you an overview of the factors that for me are decisive in the way that I believe the stock is a very good stock and will rebound eventually, notwithstanding the fact that it has a huge brand quality. The brand value is very, very significant. Just as Morningstar says in here, it has a wide economic moat. The uncertainty is medium. Of course, the moat is expected to, this moat or this competitive advantage is expected to last for the long term. Estée Lauder is the second biggest company in the world in the beauty products sector, or the beauty products industry, next to L'Oreal. And this the quality and the strength of this brand for me leads me to believe that the stock eventually will rebound. And so for me, the plan now, I believe that is the best way for us to proceed, because we bought 400 more stocks at $82. Now the current average price is around $92. The average price of acquisition of this lot of shares is around $92.50. Not this one, $91.76, because this one discounts the premiums that we receive with the puts. But now the average is around $92.50. So what we are going to do next week, because we need to bring this back from the dead, basically, is basically to use this buying power over here. We are not going to sell puts on it, because the puts allow us to get a premium, but it does not guarantee that we will be able to reduce or lower the average price of acquisition of these shares. So what we are going to do is to use this buying power, and we are going to buy the shares directly at the price they will be when the market opens on Monday. And because the price is so further down, our current acquisition price, it's around $25 less, roughly, by my calculations, 92.5 to 66.84. So this is roughly $25. So we will try to make the most of this situation to buy more shares to lower the average price. And so by doing this, when the stock eventually rebounds, because there has to be some sort of recovery at some point after a 20% drop, of course. And eventually, when the company releases its earnings guidance for the next year, the stock eventually will recover. This is, for me, something that for sure some sort of rebound must happen, because if the stock doesn't rebound, that probably means that the stock was completely misvalued before the earnings were released, and the earnings were not significantly different from what it were before the earnings were released. So the reality of the company didn't change significantly before relative to before the earnings. So I'm going to assume that the company was not misvalued, and from what we could see right here in terms of, for example, key ratios, now the company, of course, given the price, given the performance that he had, including the one-time loss that it happened. But apparently here you see the stock, of course, because there was a loss, most of the metrics related to earnings are in the negative, but this is normal. They do not adjust the metrics, and so for me, the fact that this company still has so much potential because of the strength of its brand, and because of the fact that this was a situation which was unexpected, and in due time it will be recovered, some sort of rebound will happen at some point in the future. And so because of that, we will try to get back the average price lower, so that when that rebound comes, we will be able to break even. And when the opportunity comes to sell the shares, at least at the break even, we are not going to sell calls on that, because at the end the price may not be the shares may not be assigned to the call buyer. We are simply going to sell them immediately, because the position is very, very large position, is currently more than half of our portfolio, and we cannot afford this to continue, because this is, at the end of the day, this is quite a big risk for us to have such a concentrated position in such a single stock. And so this is the plan for us to do, and for now we'll have to wait and see what's going to happen, but for the time being this is the plan. And as for the other stocks, and here you see the average price for American Airlines is $13.72, so we are rather close to our break-even point. We are still going to sell some calls on American Airlines next week, because the price is rather close. On Ford, there's nothing we can do about at this point. We'll have to wait until it recovers. And Lyft, we still have this call, which is still on, which the position is still open for next week. we had to roll over the call that we had expiring this week because it was almost worthless. And for Pfizer, the put expire, the calls expire worthless. This time, we are not going to sell calls at 29. We are going to sell at 28.50, which was the price of acquisition. Try to break even because at this point, we need to release to sell some stocks, and so that we can then focus on recovering from this blow that we just took on Estée Lauder. But we'll see what happens next. For the time being, this is it. This is now something that we'll have to focus on in the next few weeks. So yeah, let's see. So let's just put our trades in our scoreboard. Now, these were the puts that the calls that we bought back from Lyft here, and so these ones we are going to just register here. These calls were bought back actually with a credit, so this was 1.1 1.23, so $1.23, sorry, $1.22, and then we paid 63 here. So if this was $1.23 and this was 63 cents, it would be 60 cents that we received, but it was only 122, so we received net 59. So this is 59. All right, and we close the position here, and here this was on the October 31st, I believe. Yeah, this was on October 31st. So here, let's just copy here, put back the border here, 2031. So here, all right, here, and now, yeah, this was still not a bad return. These ones, by the way, expire worthless. The American Airlines call options expire worthless. This is 0 expire. This was of course a lower return because the premium was very low. As you can see right here, American Airlines put calls expire worthless right here. And now we roll over the position on the Lyft, as you can see here, with 5 more calls sold on Lyft with a premium of 45. So let's put this right here. This was here. This was on 31st of October. Wait, we are in the wrong column. So here, 31st of October. And now here, this will expire on 8th of November. This was again a Lyft. This was a covered call. The strike price is the same. 5 we sold with the 45 premium, and the commissions, let's see how many of those were. 143. So 1.43. Good. Now these puts that we had on Lyft expire worthless. Here expired. This was a much better return, of course, here, because yeah, this basically these puts expired. Now the puts on American Airlines also expired here. We're going to have also to yeah, basically add this yeah, this one right here is already done. Wait, so yeah, this one right here. Oh, and by the way, as you can see, these puts on Estée Lauder were exercised because remember, these are American options, so the options can be exercised at any time. And because the puts were so much in the money, of course, because the strike price was 82 and with the stock trading at around 66, the puts were so much in the money that the put buyers simply did not bother waiting for the puts to expire the next day. They simply exercised it on the spot, as early as they could, and so on Friday I already was forced to buy the stock. And so yeah, basically they did not mind waiting. Now here, this is a mistake, this is like this. So this was the loss, but again, this is mark to market, and this loss will not be accurate anymore when the market open on Monday, because the stock price will change. So never mind this loss, we will recover this when we sell back the stock. All right. Now the American airline puts were also sold, expire worthless. Here, expired. Right here. This also a good, pretty good return. Now the covered calls on Pfizer also expired worthless. Here, expired. And of course, this was a much better return. The premium was quite high. The stock was quite close to the strike. Was also quite close to the stock price when we sold the calls. So that's why this was such a good return. And for the time being, this is it. Oh, my mistake. Yeah, and so this is it. To put these are already covered. Yeah, and still the covered calls, of course. Let me see. Yeah, these ones were also finished. The calls on Estée Lauder, they expire worthless. And so basically, now this is a situation. Of course, this was a quite good return despite having been only 11 days. Never mind this number. This number, of course, is not significant at this point. It just gives us how much in terms of realized gains we had, but of course we are far in the red at this point. But for the time being, this is it, and we will have to see what happens in the next few weeks. But for the time being, this is the plan. We are going to try to rescue our shares of Estée Lauder, and so that's how we can then move on to try to get rid of the other stocks in our portfolio. But again, this is a demonstration of why the earnings season is so dangerous for the practitioners of the wheel strategy, and so it's much better to try to stay clear as much as possible of any options, short positions on options in the wheel strategy when earnings are coming. And so yeah, this is basically a lesson for everyone. Of course, this also compounded by my mistake, but there was little that we could do, even without counting with this mistake. But for the time being, this is it. We will move on and see what happens in the next few weeks. For the time being, feel free to like the video and leave your comments below, any suggestions that you may have. Also, feel free to subscribe to the channel, and if you need to ask me any questions in private, feel free to reach out also as well on LinkedIn as well, and send me a private message through there. And yeah, I'll see you all in the next one.